Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about LX Technology Group Limited annual report. LX Technology Group Limited offers a range of innovative solutions for device lifecycle management in China and Hong Kong. The company operates through two primary segments: device recycling business and device subscription services. The device recycling business involves the sale of refurbished IT devices to resellers, utilizing a proprietary quotation platform to facilitate transactions. This service helps reduce electronic waste while providing cost-effective options for customers. In addition to device recycling, LX Technology Group Limited provides technical subscription services for both devices and IT systems to small and medium-sized enterprises, SMEs. These services ensure that clients have access to expert support and maintenance, minimizing downtime and maximizing productivity. By offering these comprehensive solutions, LX Technology Group Limited has established itself as a leading provider of device lifecycle management in the region. LX Technology Group Limited maintains a market capitalization of $4 billion, broadly in line with the industry peer group. LX Technology Group Limited trades at a higher price-to-book ratio of 4.2 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 58% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified through a review of the key performance indicators presented. On the positive side, revenue growth is driven by several factors. Firstly, an increase in gross profit across all business segments has contributed to overall revenue growth. Additionally, the number of device recycling customers and total device subscription volume have seen significant increases, with 13.2% and 12.5% growth rates respectively. Furthermore, long-term subscriptions have experienced a 6.3% growth rate, while short-term subscriptions have grown at an even faster pace of 8.8%. The revenue from device subscription services has also increased due to the rise in total device subscription volume. On the other hand, revenue decline is attributed to several factors. Notably, the tablet computers and mobile phones segment has seen a significant decline in revenue, with a drop of -30.3%. Additionally, mobile devices revenue has decreased by 30%, while short-term device subscription revenue has declined by 6%. Furthermore, customer A has experienced a slight decline in revenue, with a growth rate of -0.6%. Other income has also decreased from RMB 27,973,000 to RMB 19,472,000. Overall, these factors have contributed to the decline in revenue. The company's financial performance has shown significant improvement, with a shift from a net loss to a net profit. This change is largely attributed to the growth of its device subscription business and IT technical subscription services. The gross profit margins have also increased across various segments. Gross profit margins rose from 8.3% in 2024 to 10.4%, indicating a notable improvement in profitability. Within specific segments, device recycling business saw an increase in gross profit margin from 0.5% to 1.9%. Device subscription services and IT technical subscription services also experienced growth, with their respective margins rising from 24.6% to 27.7% and from 59.7% to 62.5%. However, there was a slight decrease in device recycling income profit margins, dropping from 77.4% to 76.7%. Despite this, the overall trend suggests that the company's profitability has improved across various segments. driven by the expansion of its subscription-based services. The company's debt level has undergone a significant change. Initially, the total debt decreased by 6.5% from RMB 770.6 million to RMB 819.2 million. However, upon further examination of page 21, it is revealed that the total debt actually decreased from RMB 585,481 to RMB 555,331, indicating a more substantial reduction. In terms of interest expenses, there has been an increase. On page 11, it was noted that interest expenses had increased significantly. This trend continued on page 29, where it was reported that interest expenses on borrowings rose by RMB 1,455 from RMB 46,608 to RMB 48,063. Additionally, interest expenses on lease liabilities increased by a minimal amount of RMB 9. The company's performance across various segments and regions has been mixed. In terms of device-related businesses, the results are largely disappointing. The device recycling business saw a significant decline of 29.4% in revenue, while device subscription services also experienced a decrease of 3.6%. Mobile devices and non-mobile devices suffered even more substantial losses, with declines of 30.1% and 36.3%, respectively. On the other hand, there is one region that stands out as a bright spot. Shenzhen has emerged as a strong performer, accounting for 82.5% of the company's total revenue in 2025, up from 72.4% in 2024. This significant increase suggests that Shenzhen is driving growth and contributing substantially to the company's overall performance. The company's management has expressed optimism regarding its future prospects. According to recent statements, the organization plans to venture into novel business opportunities. This indicates a forward-thinking approach, where the leadership is committed to exploring fresh avenues for growth and expansion. By doing so, the company aims to stay competitive in an ever-evolving market landscape. And that concludes the financial summary for LX Technology Group Limited. Feel free to comment below, and I will be happy to answer them when possible.